So BigBear.AI has been on a volatile run recently, making runs back up to $6.90 just recently. If we're taking a look at quantum as well, that was an interesting market we were watching this morning. Very even, very right around that 0% gain, and then took off midday, and we see most quantum companies rocketing today. But AI defense companies are on a pedestal right now because basically we're anticipating more growth as a result of government reopening. Now, what we've been watching with Big Bear, and it's still kind of in this slight downtrend despite having this recovery back up to around $7 today, is since that $9.44 range right around October 14th, Big Bear has kind of sold off and sold off, bouncing, but still continuing down to around $6.50 before bouncing back up. And it's trying to break out. It's trying to continue to get back up into this trend because, as we know, over the last year, and we look at Big Bear, it's had this very bullish outlook. You can see we started covering it around $1 a share, and we've seen it make these big runs up to $10, sell back down with the greater market, push back up through the summer, was up to 850 once again, and then sold back down. But it's always kind of held above that 200-day moving average. And so with today, you look at this recent sell down over the last few days, and we're saying, well, it's still in a position where, as a company, they haven't seen, for example, the financials reflect all of the infrastructure that they've put out. And so there's not really a lot of pressure that I could put on the company. Again, we're just here to give you the insights, not here to have an agenda of any sorts. But as an investor in the company myself, seeing them sell down recently, been watching for them to not just kind of recover like they have today around 4%, but see them start to break back above that EMA. If you look at this blue line, this EMA, the exponential moving average, it oftentimes acts as a support level when we're bullish and as a resistance level when we're bearish. And we see them really holding that bullish trend. And then recently, as they've turned bearish since October 14th, so the last week and a half here, they're holding below that EMA. And so as we see them start to make this effort to break back out along with other defense stocks, and most stocks looking green here today, kind of holding the trend for how they started this morning, they're now looking more on the buy side. RSI, MACD looking now oversold on Big Bear, and we're looking for them to potentially continue. There's a couple levels that are really key for them and a couple indicators to watch. We'll get into that. But when it comes to the market, they're still awaiting. If we look at some of the tech, I had some projections here. We were using this market here. We have a market outlook. This is a revolutionary new system that we've developed for AI analysis of companies, and we're doing a Big Bear analysis, and we can use the best models in the world and we pair them with our data. And so we actually were using Grok today to do an analysis, and then we had the government shutdown data here. And essentially what we had going was we were looking at the government shutdown data. The big beautiful bill that recently passed puts a large amount of investment back into the defense market. But when we're looking at the history of the government shutdowns, in general, most of the time, we've seen the defense markets have the biggest impact, with high impact as contracts may be delayed. When we're looking at the history, though, of all of the different shutdowns in the past, and we consider this data for our analysis here, and the predictions oftentimes are actually that you have over a 12.7% increase in the government shutdowns. So in this data, on average, we've actually found that government shutdowns historically have positive returns. Okay, and while defense markets notoriously are the most negatively impacted, which is kind of why we've seen Big Bear pull back recently, but also just greater market pullbacks, there's still some, according to our AI and the models that we run, whether it's Grok, I've even been running, OpenAI or Claude, most of them project that BigBear.AI is still in a pullback, and we're going to see continued pullbacks over the next day or so. And the market impact from what they're going through would suggest that. But when we look at their infrastructure of what they're building, we know that that is the case, and that's what we're seeing. They are pulling back, but we've seen a big push up today, or more of a push up. Their VeriScan technology is where their infrastructure is a tech company, and where their AI is focused on data that the US government would love to have. And that's why we see them secure government contracts they've deployed at major airports. And so I think when we're looking at the government analysis, we're looking at likely outcomes for government shutdowns. And while there's $400 million lost in daily compensation, 750,000 workers here that are basically on pause. And actually, I even know some. I think there's a CPA who's in Stockmate, where we trade live every morning. And he was just telling me, I believe his name's Joshua, he's just telling me, yeah, I'm not working because government shut down. So that's a factor. And then one of the other impacts are no new government contracts. So when we look at them, they've had recent news, this BigBear.AI stock, for partnerships that are primarily government. Now, outside of the government, the data that they're collecting, they're working with the Washington Commanders, potentially forming a partnership there around facilities. And they're also having the ability right now to still keep the momentum on their VeriScan deployments. Again, they have that AI driven biometric tech that they're deploying at major international airports, JFK, Denver, Los Angeles, you name it, they are there. And that technology is going to give them more momentum. So as of right now, there hasn't been a large amount of money influxing into Big Bear, because there hasn't been that reflection in their income statements, or frankly, they've seen the balance sheet increase, but really they haven't seen the income increase as a result. And so they're still holding on the financial side, kind of awaiting their next earnings on November 10th. And so that brings us to kind of like, all right, news looks pretty good, deployments look good, government shutdown working against them a little bit here, but maybe that's a good catalyst in the near term. Then you kind of look at the financials and say, okay, they look all right. They're bringing in more money on the balance sheet, but their revenue's still down around 40 to 50 million a quarter, which for the current market cap is fairly low, given they're at like $2 to $3 billion market cap, and they're bringing in about 150 million a year. We'd like to see that number bigger, probably closer to that 350 million to 500 million a year for a really healthy undervalued buy. And so the fair value, just not forecasting for the future at all, could actually indicate that they could sell down further, and that would kind of put them down into this $5 range. But with the AI wind at their back, and if this government reopens and the big beautiful bill at their back, and some of the other things that are going to act as catalysts, like the World Cup, which is definitely big because that's going to be a lot of people coming in and out of the US, and their data is going to explode, and Department of Defense contract that they have there is probably going to have demand. And so you got the Olympics, you got the World Cup. If those things continue and investors see those things as big catalysts, they do have this fairly strong support level here in this range around $6 to $6.50. Now that's where we saw them bounce today. However, they're still below that EMA. So we're looking for kind of, you see the RSI, the MACD looking oversold. In an ideal world, we see this continuation back up into the $7.50 range. That's a 10 to 12% increase. And I say ideal because, as I mentioned, we have long-term positions entered around $2.80. And so we'd love to see it go up, of course, as an investor in the company. But from bullish perspective, that's what you're looking for, that $7.50 to getting back up into that $8 range, and actually continuing some of the trend would be ideal for them and most investors as they're looking to continue that momentum. Now, let's see if they hold that $6.50 support. If they can't hold that support, the bearish levels to watch are definitely back down there around $4.50 to $5. I don't see that happening personally, and I'll tell you why. They dropped to that level after earnings. We saw institutional buying surge after that. So we saw very shortly after their earnings came in and they dipped down, if you're watching, you saw State Street invest, Renaissance Technologies, you saw BlackRock and Vanguard and Goldman Sachs, JP Morgan jump in and buy more. And the interesting part is you'd say, oh, well, financials came in not so good. That rebound, what is that rebound? Very shortly after, we're talking a week and a half, institutional buying kicked in. And even the day after, we saw institutional buyers. And the reason why that's important is because they have 203 holders with increased positions on Big Bear. So 203 increased positions and only 69 decreased positions. So essentially, despite that move that happened with the financials coming in less than expected, I think they noticed the write-offs and that it wasn't as bad as it looked, because obviously institutions actually bought up the stock more. We see them start to get up and kind of stabilize more or less around that $6.50 range to where they were pre-earnings. And so now that they're kind of stabilizing, maybe we shook out some of the hands, and I don't mean that in any negative way, but there is somewhat of a shakeout that happens when you see sell-offs kick in, that kind of the core investors that are holding the company and obviously wanting to reap long-term benefits of the company are there, and they're kind of making up that baseline, that foundation of the company. And I think that's kind of the case with Big Bear, and I'm kind of seeing that level around that $6 range as kind of the core investors that are in it. And then there's another level around $2.50. That's kind of where I'm at that we've seen them really have some investor convictions. And so we'll watch. We're looking for obviously the bull trend to continue up to that 750, but we do have a support around 650 to watch. They're at 687 and up 4% before close today. Let me know your thoughts down below on BigBear.AI. According to AIs, we do see a slight correction over the next day or so, but looking bullish over the next few months for Big Bear. And if you ever want to learn how to use AI models to conduct your research, save time, and do what we do in our 3-step process, going through the market, the financials, the technicals, the news, and projections, this does it basically all my experience put into this machine, and it does it for you, combined with the best data sources that even I'm not constantly looking at, like SEC data and market sentiment, that is integrated into the AI models so that they can consider that data they otherwise don't have access to, but that we've gone out and gotten, as this is the data that financial institutions oftentimes reference, and we've put it into the best models, your favorite models, OpenAI, Grok, Claude, or Gemini, and the most premium available versions of those models. So you don't have to wonder if you're using the best AIs in the world. We bring them straight to you. So again, if you want to check out the AI tools that we're using now, it's the first link in the description. If you'd like to join our daily live trading sessions, as I mentioned, we just wrapped up our live session this morning, and we're focused on APLD and APLX and holding some positions long term. We didn't do any trades today, but we're in a position there, and some of our positions include quantum companies up over 200%, semiconductors like AMD and APLD over 100% in data centers. And then we also have some space tech companies we focus on, and defense companies as well. And if that's you, you're saying those are the markets I want to invest in. I'm looking at those companies, I'm looking at those markets. You want to learn how to invest in them, what makes them tick. Then again, you can learn it all in the second link below in StockMate, and join us tomorrow morning in our live session at Market Open, and even get a free t-shirt when you sign up. Appreciate you all. If I earned your thumbs up, smash the like button. Do consider subscribing, and I'll see you in the next video. Take care.